All right, let's play financial detective today. Our case file? It's on a stock that's giving off some seriously mixed signals. Is this thing a hidden opportunity, or is it a dangerous trap? Let's find out.
And that's the big question, right? We're going to dig into the technical data for a stock called ABEV, looking for clues to figure out if it's a hidden gem or if it's a trap just waiting to spring.
So here's how we're going to crack this case. First, we'll size up the ABEV puzzle itself. Then, we'll look at this strange conflict between the price trend and what the crowd is doing. After that, we'll pull out some advanced forensic tools to check the momentum, map out the price battlefield, and then we'll deliver the final verdict on the most likely scenarios.
Okay, let's meet our subject, ABEV. And right now, this stock is just stuck. It's in a total state of indecision. The price is barely budging, which, creates this real sense of suspense about where it's going to go next.
All right, here's the initial file on ABEV. We see its last known position was 230. It's sitting a little above the midpoint for its yearly range. But check this out. Here's our first clue that something's a little off. That risk/reward ratio, 0.125. That's not great. It's considered unfavorable, which basically hints that the potential downside could be a lot bigger than any potential upside. Interesting. Okay, now we get to the really juicy part. We're going to look at two key pieces of evidence that are telling completely opposite stories: where the price is headed and what the crowd is actually doing. First up, the trend. The easiest way to think about the trend is like a river's current. Is it flowing fast in one direction, or is it super calm, almost stagnant? That's what we need to figure out. And this number right here, the ADX value, that's what measures the strength of that current. For ABEV, it's just 11.43. Now, to give you some context, anything below 20 is considered a really, really weak trend. So our river, it's barely moving. It's almost at a standstill. But technically, it is drifting just a tiny bit upwards. But here's where the plot really thickens. If the trend is the price, then the trading volume, that's like the roar of the crowd. It tells us how many people are actually in the game. And for ABEV, the crowd is telling a totally different story. Yeah, this slide really lays out the whole conflict perfectly. On one side, you've got the price just kind of drifting up weakly. But on the other side, you've got the crowd, the volume, and it's telling a different tale. We're seeing what's called negative accumulation. In simple terms, that means that even though the price isn't dropping, it looks like sellers are more active than buyers. So yeah, the price and the crowd are literally moving in opposite directions. Bizarre. So, a contradiction like this means we have to bring in the big guns. We need some advanced forensics. We're going to look at what are called momentum indicators. You can think of these as tools that can reveal hidden pressure building up behind the scenes, kind of like a pressure gauge on a pipe. And our first forensic tool is the Relative Strength Index, or RSI. So what's this pressure gauge telling us about the secret forces at play inside ABEV? So what is the RSI? Well, very simply, it's a momentum gauge that runs on a scale from 0 to 100. It's measuring how fast the price is changing to tell us whether buyers or sellers have more power. It's like a constant tug of war between the two sides. Okay, so ABEV's RSI is sitting at 60.01. That's pretty much neutral territory, but it is just a little bit over that 50-yard line. What this tells us is there's a little bit of buying pressure, but it's not a knockout punch by any means. That tug of war we talked about, it's pretty evenly matched, with the buyers having just a slight tiny edge for now. All right, looking at our other momentum clues, this just makes the mystery even deeper. On one hand, you've got indicators like the MACD and stochastics that are hinting at some weak buying signals. But then on the other hand, another indicator, the Stochh RSI, is flashing a bright red warning light. It's screaming overbought, which could mean the stock is due for a fall. So even our advanced forensics are giving us conflicting signals. What is going on here? To really get a grip on this conflict, we need to map out the battlefield. We have to pinpoint the key price levels where these battles between buyers and sellers are actually being fought. Because right now, these levels have the stock completely trapped. Let's start with the floor. This is what we call the support level, and it's at 225. Think of it as the buyer's defensive line. Whenever the price drops to this level, buyers tend to jump in and defend it, stopping it from falling any further. And smack dab in the middle, right in no man's land, is the current price, 230. It's sitting almost perfectly between the two big battle lines. And above that, we have the ceiling. This is the resistance level, up at 234. This is the seller's fortress. When the price tries to climb this high, sellers usually come out in full force and push it back down. So you can see the stock is totally pinned between 225 and 234. Okay, we've gathered all our evidence. We've got the weak trend, the weird negative volume, the mixed momentum signals, and now we have our battlefield map. It is time for the detective's deduction. Let's lay out the most likely scenarios based on everything we've just uncovered. So this really leaves us with three possible outcomes. First, the bullish case. That little bit of buying pressure finally builds up enough steam to break through that 234 ceiling. Then there's the bearish case. The negative volume finally wins the day, and the price breaks down right through the 225 floor. And of course, the sideways case. The stalemate just continues, and the stock stays trapped right where it is. And this all leads us to the most critical clue from our investigation, the risk of something called a volume trap. Now, what is that? It's a situation where the price looks totally stable, maybe even drifts up a little, but the volume, the crowd, is nowhere to be found. It just doesn't support the move. And that, my friends, is a major red flag that the price action might not be trustworthy. In other words, it could be a trap. So we end up right back where we started, with a genuine mystery on our hands. The case of ABEV is a perfect example of how sometimes the data doesn't just hand you a clear answer. Sometimes it gives you a conflict. You've got the price telling you one thing and the volume telling you something completely different. And that really leaves us with the ultimate question for any analyst or investor. When the data tells two different stories, which one do you believe?